Welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all that into accurate, actionable briefings every day. Be sure to check out gexlog.com/dashboard2 for the daily market snapshot and evening recap. New features are being added based off of your feedback, and I'll be sharing these features in an upcoming video. Now let's get into the daily brief. As a reminder, this is market intelligence, not financial advice. Thursday, April 9th, 2026, 7 a.m. Eastern, ES futures are trading at 6,800, running above the SPX prior close of 6,783. A massive pre-market data dump threatens to override the vulnerable gamma regime. Last session, our caution signal proved valid. While the 6,600 put wall and 6,800 call wall held, the upside risk-on surge exceeded the expected move, transitioning us into a day one of positive gamma. If the 8:30 a.m. Eastern data triggers a mechanical repricing, then overnight positioning will be erased before the opening bell. The market is currently in a positive gamma regime backed by a net GEX magnitude of positive $2.1 billion. With the VIX elevated at 21.38, dealers are net long options. In this regime, they mechanically sell into rallies and buy into dips, which typically dampens volatility and confines price action to mean reverting ranges. The GEX flip level sits at 7,000, operating 217 points above the SPX close. However, the overnight regime is highly vulnerable. 12 high-impact releases scheduled before the open could force massive dealer re-hedging and rewrite the regime. The equilibrium zone is bound by the put wall at 6,700 and the call wall at 7,000. ES futures are positioned 100 points from the put wall and 200 points from the call wall. Neither wall is under immediate threat from the expected move of plus or minus 91 points. ES futures at 6,800 have already cleared both R1 at 6,645 and R2 at 6,674. Do not describe R1 and R2 as resistance. They are reclaimed levels below price. The only remaining upside resistance is the call wall at 7,000. Looking downward, ES futures are approximately 100 points above the put wall at 6,700. The SPX cash index closed 83 points above it. If the overnight gap fades, the buffer shrinks to 83 points. Given the elevated VIX, either distance should be considered secure. Overnight, sentiment was pressured by geopolitical strain as signs of a fracturing Middle East ceasefire emerged, with Iran flagging violations. This unwound some of yesterday's risk-on momentum and drove crude oil up nearly 2.8% as geopolitical risk premiums were repriced into energy markets. Today's entire session hinges on the 8:30 a.m. Eastern macro bundle, featuring the PCE price index, core PCE, and Q4 GDP growth rate. Calendar risk is maximum 5 out of 5. If the data comes in line, the positive gamma dampen effects hold. If the data surprises with hot inflation or a severe growth miss, the ensuing volatility will shatter the dealer dampening effect and force directional chasing. Strategically, positive gamma environments normally favor income generation, but today demands patience. The primary plan is a gap fill fade. Trigger at a rejection below 6,783 after the 8:30 a.m. Eastern PCE release, fading towards 6,700. You must wait for the PCE data before entry. If the price rolls over, consider a post-catalyst bear call spread or put debit spread. The alternative plan is a breakout continuation. Trigger if price holds above the upside expected move target of 6,874 after the data, targeting the call wall of 7,000. Entering directional positions prior to the data drop is explicitly warned against. The primary trigger for the day is a post-data rejection below 6,783, targeting a fade of 6,700. Wait for the macro prints to clear before deploying capital. The data drops before the open. Let the market show its hand first. Levels set, bias defined. Good luck out there. If you want to see more of the Gamma Brief in your daily rotation, hit that subscribe button and don't forget to like. Standard disclaimer applies. This is market intelligence, not financial advice. Derivatives are high risk. Always trade your own plan.